Good morning, everybody. Hopefully the mic is functional today. I think it's on. I think it's on. Had some technical difficulties last week, so apologies for that. Good morning, Pat. Good morning, D. Koch. Good morning, Tom. Hope everybody had a good weekend. My New England Patriots did not have a good weekend, but just happy to see them back in the big game so soon. Congrats to all the Seahawks fans out there. Congrats to everybody who bet on the Seahawks, which looks like the easiest lock of all time. What is up, the Buida? Good morning. Got a big episode this week. As seems to be the case, there is never a dull moment in the financial markets these days. Got a lot to talk about here on my agenda. I feel like I may have to cut some things to keep this reasonable. We're going to talk about last week's software meltdown in equities, crypto bottom, potentially, Bitcoin and Epstein. That should be a juicy one. Some updates on the latest with Kevin Warsh, the Fed chair. Wow, a lot happening. Before we get into it, link in the description for the free Magic Lines Discord. It's been popping lately. Got some great conversations happening in there. It is a chaotic world to invest and trade in these days. You can't go at it alone. You got to find yourself a good community. I'm in there posting updates every day. Would love to have you guys in there. Please consider joining. And like and subscribe. Give the stream a like. Give the channel a follow. Helps show me that you care about what I'm doing. Got a lot of stuff going on in my life these days, you know? It's hard being a part-time streamer as well. What is up, Mike Ferroni? GM, buddy. Good to have you. All right, let's jump right into things with equities because got a lot to start with there. Had a bit of a nasty sell-off last week, but it was resolved pretty quickly and cleanly. This nice little weekly sweep candle. So I've been pretty bearish on equities for a bit, or at least cautiously hedged, taking some longs in some select sectors like energy has been pretty juicy. But tech in particular has looked kind of shaky. And I think that's a big reason why we've seen such a drawdown. There's a marked difference between the NASDAQ, which is very kind of tech software heavy. You can see the chart there with the lower low. And you get the S&P 500, which has managed to put in a higher high. And then you've got the Dow Jones, which is looking pretty strong and has the least exposure to tech and software of any of the indices. So my general take at this point is that the drawdown we saw is sort of idiosyncratic in nature and kind of isolated, I think, towards capital rotation out of software and not indicative of a larger market correction that is imminent. And from a TA perspective, if we kind of zoom in a little bit on the S&P 500, we'll pull up the 6-hour chart here. We had this very nice sweep back in November when there was a little bit of panic after NVIDIA earnings, took out some major liquidity, and had a very forceful move up, at which point we've kind of been consolidating and chopping sideways. And price has basically just been chilling above this order block here that made that sell-off back in November. And if you were following me in the Discord last week, you'll know that on Friday, I started to pull a classic Steven flip-flop, I said, I actually think this is looking bullish and I might start longing the crap out of some things. And my general framework on this is that we're basically seeing like a kind of classic power of three accumulation, manipulation, expansion type setup where we have this obvious consolidation here. This looks like a manipulation move to me now because we had a forceful move into a key weekly area. We left behind this imbalance and then inverted that fair value gap. We also created a breaker on the 6-hour chart, which we closed above and retested pretty cleanly there. So I think this is an interesting opportunity because the market has offered you what seems to be a cool little invalidation. Like if I'm right about this and we get a breakout, this could be multi-week, multi-month, multi-year, who knows how crazy it gets. And you can have like a pretty tight invalidation as to where you're wrong. There is some stuff that we could sweep lower in here. So I don't even know that if we come in for another sweep, I'm definitely wrong about the idea, but might look to see another setup develop. I've been thinking about how to play this, and because so much of this sell-off revolved around software, what is it, IGV? Yeah. So IGV is an interesting chart. This is the iShares Tech Software ETF, and you can see this thing just absolutely nuked, right? Had a 33% pullback in software. And this was fueled largely by some of the latest developments coming out of Anthropic with the new Claude Code. I don't know if you guys have checked out that Claude Code update, but it's wild, man. Like, I am taking Ubers to places now, and I'm just on my phone, just developing software in the Uber. It's wild. This thing codes very well, and the market has basically been wondering, is all SaaS now worthless? Does this mean anybody's just going to be able to think through their own tax software, and so we don't need Intuit anymore? We're all just going to have these AI agents that build them for us. I talked last week about ClaudeBot, OpenClaw, whatever you want to call it these days, how I've been playing around with that. And it's really powerful stuff. Definitely still a little bit rough around the edges, but you can see the future. So one of the unique opportunities that came as a result of this sell-off, and I wrote about this in more detail in my Substack yesterday. So if you didn't check that out or you're not a subscriber, go to magiclines.substack.com. Check that out. I talked about software Armageddon and what the trade could be from here. I'll give you some of the insights here at a high level in this video. But we basically had this sort of like industry-wide degrossing of risk where stuff was just sort of indiscriminately sold off because it was sort of like related to SaaS. And that's, I think, created an interesting opportunity in the market because stuff got sold that probably shouldn't have been sold. So one of the things I've been kicking around in my personal life is like how to build out the kind of hardware infrastructure for my bot and all the things I want to do with it. And I've basically arrived at the point where I'm like, okay, I'm going to buy like multiple Mac minis and probably a couple of $10,000 Mac Studios to run this thing. Because after playing with this, I just basically see that I can do anything I want. And the only constraint that I have is hardware. And if I can get this hardware and run some of these models locally and not spend $10,000 a month on tokens, I can maybe do like a lot of stuff. And that anecdotal experience I've had is something that I think is going to ripple out into, the rest of the economy. And there's been this debate raging for a long time. Like, is this CapEx build out for AI like overkill? Is this analogous to the fiber optics build out from the internet? And there's been this kind of thought, like on the one side, it's like, will NVIDIA ultimately suffer because as these models and the hardware gets more and more and more efficient, we won't need to spend as much money on them anymore? Or is the other side of the coin that the demand for AI and the things it can do is just always going to outpace the increases in the hardware efficiency? I.e., if the models get better and the hardware gets cheaper, do I simply stop using my bot at a certain point and just tread water? Or do I keep letting it go and pushing the limits? The hardware is cheaper, good, I can buy more of it. The models are cheaper, good, I can use more of them. And I'm pretty firmly convinced that the latter is the case right now. And so the Claude stuff, the Claude bot stuff, in my mind, just seems undeniably turbo bullish for stuff that's sort of in the hardware realm of things. And I'm sure there's probably some smaller cap plays you could make that have a little more torque to them in terms of your upside. I like to trade, I like to use leverage, and so I'm happy taking a company like NVIDIA and just levering up on it to get the return profile that I want, especially because I feel pretty good about NVIDIA and where it's at. So in the Discord yesterday, I said I was buying NVIDIA at the close on Friday. We've had a pretty nice move up to start the week, so that's looking good so far. I was thinking for a while that this whole thing here was potentially like some distribution. Honestly, a pretty ugly formation. The reaction after November earnings was bad, but we have not taken out any of these lows. And it's starting to look to me like this could be like reaccumulation. And if you pull up like some of your momentum metrics, like the RSI, 3-day RSI is in like a very interesting spot here on NVIDIA. And you've got this kind of divergence where you've been making the higher highs. You initially had the lower highs, right? The bearish divergence, but now this looks like bullish divergence to me. And the RSI has reset to the 50. So price is primed to expand again. Like I think we can definitely expand, and I think we could start like a new leg up that could go quite high on this. So I closed my short at break even last week. I flipped long. I'm going to be looking for opportunities to add to this probably if it's given to me. I would not be surprised if something happened and we came back down and we ended up sweeping out some of this liquidity. There is a nice little fair value gap here, I think, on the 3-month chart. Yeah. So you can see on the 3-month, if I close this out, a little gap there. And we did have this bearish quarterly candle with the sweep. So wouldn't surprise me if we came back out and took out 170, 169. I would view that as like an enormous buying opportunity if that happened. I don't know that we're definitely going to go back there though, which is why I bought. It's possible that the news of last week or recent weeks was like a bit of an exogenous shock to the market that wasn't pricing in, at which point maybe we don't come back and take all this out. And if we get a close here, like this on the daily today, this starts to look pretty juicy for me for a bottom. So we're pretty balls long NVIDIA at the moment. Very bullish on this thing now. Very bullish on AI agents. The other opportunities in the market lie in stuff that is software, but not at all related to the SaaS meltdown. A really, really good example of this, I think, is Palantir. So Palantir we shorted at 176 or so, targeting 128, and this demand down here. Took this short off because, again, I think what's happening is potentially like a major inflection point, and I don't want to be short during this period. It's possible from a TA perspective that this is basically just a sweep of this range low and we end up with like deviation, and then continuation upward. Palantir is software, but it is software that is like in bed with major government organizations and huge enterprises and stuff like that. It is not the type of thing that somebody's going to vibe code in their living room and kill the business of. So it makes absolutely no sense that this is sold off along with something like Salesforce or Intuit. And as such, you got to wonder if this is going to mark like kind of like a major manipulation bottom in the market. So I think longing Palantir here is interesting from like a trade perspective. You really do want to see some sort of close back above 165 to give an invalidation. Otherwise, this could still be like a lower high and we go lower. The spot where I'm just going to mortgage my future children is down here, sub 100. If we get back into this demand for some reason, that would be enormous opportunity. But I'm open to the idea that this is just a reaccumulation and this is going to basically be some sort of like Wyckoff spring and then we go higher. So not bearish on Palantir anymore. I have not added to my position yet on this one just because of the lower time frame setup. So I'll be monitoring that in the Discord. But I think from like a thematic perspective, it is really interesting and fits nicely into this narrative that I'm talking about here with the potential overreaction of to Claude effectively. So we're liking Palantir. The other company I talked about in the Substack, which is a much riskier play, is Oracle. So I bought some Oracle last week at this level here. Have been watching it for a while, 135, 136 or so. I think I ended up getting in around 140. Oracle is a really interesting player in the space because it's basically like levered to the tits on AI CapEx build out, right? So in a world where everything I just said is true and that we start going up only in hardware demand from here and we're nowhere near the top of this CapEx build out, Oracle is going to print because this thing has been dumping due to the credit concerns on their debt. They're hyper exposed to ChatGPT. I think they're like 94% of their credit default risk is basically concentrated in the success of ChatGPT, because I think ChatGPT is the one kind of renting out all of their infrastructure. So in a world where those fears kind of start going away, and this thing has already been sold to the ground to a crazy extent, like this can reverse and go back to all-time highs. And that's a smooth 120% just a prior all-time high from even today's price, never mind the price we bought it at. So that's an attractive trade to me. It is a trade that I think is worth getting into, but observing, because again, there's no structure here. It's just been kind of down only. V reversals happen, but they're rare. So typically you get a retrace or some sort of accumulation range forming where you can better frame along. But zoomed out, I think this looks really good, both from a thematic perspective and from a price action perspective. I mean, this is basically an origin monthly order block, and you can pretty clearly see the higher high, higher low structure here. You're basically just buying at range lows. And even if you were to just take a shot on this and be like, fuck it, I'm going to get out if we lose this low, maybe I get back in if there's a sweep and a setup. Even if you do that, I mean, this is still like a 4-to-1 trade. And I think it has like kind of long-term upside potential, like as a runner, as like a long-term hold in the stock portfolio. So pretty interested on that. And on a related note, I think Microsoft is also something I'm watching. Similar chart to Oracle. You can see the monthly demand, the top of this, right? I think there's a good argument that this is just going to be the first pullback on the monthly, and then we go higher. there's some nice like equal highs chilling up here as a draw on liquidity if stuff starts reversing. So I don't have a position in Microsoft yet, but I think worth keeping an eye on for all of the reasons that I stated earlier. So yeah, feeling pretty bullish right now. Other reason I'm feeling pretty bullish, I don't know if you guys saw, but there were some developments today with over the weekend, I guess, with the new Fed chair, Kevin Warsh. So when he was nominated, that was one of the catalysts for the sell-off we saw. It was a bit of a surprise to the markets. There was reason to believe he might be hawkish from past things that he's said. It never really made sense to me or anybody else that this guy would just come in and hike rates like after Trump, did the things he's been doing for the last year. And there might be something kind of more interesting going on here. What Warsh has done recently is talk about shifting the Fed balance sheet more toward treasury bills. And that is interesting because you're going to get short-term rates down, which, as we know, tends to be bullish, right? The problem with doing this is that you're creating a mechanical problem in that if the Fed is holding fewer short duration bonds, that means that duration demand has to go somewhere, right? Who is buying the long end? And initially, I think, knee-jerk reaction to the market is for those long end spreads to start blowing out a little bit. But what is likely to happen, I think, is that we're just going to go into this financial repression era that I have been talking about and other people have been talking about, to be fair, for many years, right? The way that we get the long end of the curve to not blow out is to have the Fed basically force buyers, or the government to force buyers into the market. So you could think about creating laws that require pension funds to hold X amount of long duration bonds, or maybe we force this upon our trading partners in some way. I think we saw early indications of that last year. So basically, we're going to punish the long-term savers. We're going to punish the boomers who are holding these bonds. We're going to punish the people in the pensions who are holding these bonds. And this creates a good opportunity for people like you and me, because like we don't have to buy this dog shit, and we can take a step out and think about, well, what does the world look like when the Fed and the Treasury get in bed together and they start doing all these shenanigans to alleviate the financial problems that we have? And there's been this kind of open question of like, how do we solve the debt? I've been a proponent for a long time of running it hot, right? I think the least bad option is to juice the shit out of GDP, to juice the shit out of AI, to have the government basically get in bed with AI and AI companies, get in bed with energy companies that kind of fuel, the kind of base components that we need to do the AI thing. And we juice GDP to 5, 6, 7, 8%. I don't know, whatever it takes, basically. And we sort of inflate the debt away by doing that. And the big losers in that are anybody who holds bonds. The big losers in that are the dollar. Big winners, precious metals, which may be back on the menu now with this kind of reversal from Warsh, or select areas of AI, tech, energy, especially those areas where the government may be putting its thumb on the scale. And although the libertarian free market guy in me doesn't really like this, I've also kind of just come to terms that this is the way the world is right now, and we're not going to get our libertarian utopia anytime soon, if ever. I don't even think it's practical to do that at this point. Things are too far gone. We are going up against the Chinese superpower that doesn't give a shit about any of these things, and it's basically just all out war right now. So we have to kind of embrace the investing paradigm that we're in and think about how to make money in this world as it is, and not care about how it should be, Side note on Palantir, one of the interesting things about Palantir isn't just the fact that it is a software company that has no exposure to cloud code to the downside. It also fits into this basket of buying things that are kind of in bed with the government. I don't know if you guys remember that famous interview a while back that went viral on X, where Alex Karp, the CEO of Palantir, was like popping his in and spinning the laptop on his finger. If you go back and look at that interview, the guy interviewing Alex was actually Kevin Warsh, the current Fed chair prez. Warsh is a disciple of Druckenmiller, who's been kind of like a proponent of some of this stuff. He's been a big proponent of AI and kind of like integrating some of those philosophies into the federal government. So I feel like the die has been cast at this point, and this is what's going to happen. So for the love of God, don't own bonds. Bonds, like long term, they're just doomed. They're probably interesting trades at some point, but like as a part of your long term portfolio, I think like owning bonds instead of owning like metals or miners or companies with exposure to that stuff is just like absolutely fucking mental. So hopefully the bottom is now in on tech. Hopefully the bottom is now in on metals, on miners. Silver's been interesting lately because there's this talk of like a major silver squeeze brewing with this Chinese whale who's short like billions and billions of dollars. Chart it looks kind of interesting on the monthly. Like if you pull up the monthly, you just see kind of like an imbalance here, and you start thinking, was that move down just a retest of the imbalance? I think if we close a daily back above $87 or so, silver starts to look kind of spicy. I would love if this kind of pushes up and closes above and chills here, and then we get a move back down into this area. And then if we do that around like $80 or so, let me see if there's anything on the lower time frame chart. Yeah, I mean this whole drawdown here is basically an order block into that monthly area. So you'd want to look for some sort of change in character with the push above, and then if on the retrace there's some lower time frame setup down here, kind of like sub 76 or so, man, that could start looking like a really interesting trade. But I think regardless, like if you degrossed, de-risked gold, silver, etc., on the big nuke, on the Warsh thing, probably should at least be adding back some of it, or starting to add back some of it, because I just don't see a world where metals are going to go down if this ends up playing out with the Fed, with them just buying up the short end and then manipulating the long end. It's just got to send gold to freaking 20K at some point. The Buida, maybe inflating the debt would work if they weren't just going to create more debt. Creating more debt isn't necessarily a problem in and of itself. It's like, what is the rate that you're creating debt relative to the rate that you're growing, right? So if you have a sustainable way to grow via debt, and you're doing that in a sustainable way, there's nothing inherently wrong with the debt. I would agree with you that the government never uses the debt efficiently, and we're just going to waste the money anyway. So I don't know that this ends up working. But at least in this instance, like the onus is being put on the private sector to do things and grow, as opposed to like austerity. Like the government's going to cut programs and stop spending, and then people are going to riot in the streets, and then just elect some populist that makes Trump look like a libtard. Like it's just not happening. You also asked, what if we form in the right side of head and shoulder on S&P? I mean, look, There is still a scenario that I'm watching where stocks end up nuking, or maybe just pulling back. Maybe we don't have to get super fantastical about it. Everybody loves the head and shoulders pattern. It's everybody's favorite thing, right? It's just so easy to see. You can see them everywhere. They require context, though. Like, you can't just short a head and shoulder because there's a head and shoulder, right? From like a price action perspective, from like a range theory perspective, which I put a lot more stock in than naked patterns, right? This is a very quality range here, this October, November range from here to here, because it takes upside liquidity, it takes downside liquidity, and this becomes like a good framework for price and watching how price behaves about this range. So when this range is formed, you have a forceful push up and you have acceptance above the mid-range here, right? So consolidation, acceptance, we got multiple closes above the range high. It is perfectly normal and expected for price to want to dip back into the sort of origin area of the range down here, grab some fuel, and then expand to the upside, right? So the problem doesn't exist yet because it's just price is just doing things that you would anticipate. Basic range principles: when you form a range, you start closing above the range, you consolidate above the mid-range. It is the expectation that when price goes back to the origin area of the range, especially if nothing up here has been taken, like if there was like a major yearly level or something up here, then you can reverse off that level, but there's nothing up here, right? You've just got acceptance, consolidation above a key area. If price comes up and then pushes out of the range forcefully and then like reverses strongly back inside the range, then this starts looking like a Wyckoff distribution schematic. This starts looking like your up thrust after distribution, which is like a very common thing you see in like crypto tops. That starts looking nasty, right? That's bad because then you've got your consolidation. You've mitigated the area that should send you higher, and that area sends you higher, but then back down into the range. There's like a forceful rejection from sellers, and now price needs to come back down here. Maybe it bounces, it takes out some of this, but you could get a full retrace of the entire move back down towards, some of the origin demand from the tariff tantrum, 5,500 and lower, that we haven't touched yet. So that is a scenario I'm very open to, right? But it makes sense to me to be long down here at like 6,800 because I'm fairly confident that at a minimum, we're going to push out of this range. So if this scenario takes place, I will round trip everything, but I'll break even on that long trade. I'll have a clear setup to the downside. And if we just start turboing up, I'm not going to be like, oh, fuck, and panicking that I'm not a part of the pump. So I like to see areas where there may be like major inflection points, like lower time frame stuff that looks bullish to me, that could be the start of a higher time frame reversal. For me, that was the closure above this sequence of 4-hour order blocks, because this is like an early indication of a valid weekly sweep. You've got the weekly down close candles forming the sweep and a forceful close above them. A weekly sweep can turn into like a monthly uptrend very easily. And so for me, it made sense to just position at the early indications of the weekly sweep, given the context of all the stuff I showed you guys, the potential power of 3 setup. And if I'm wrong on this and I get stopped out, it's like, whatever, I'll lose 1% or whatever. But if I'm right, the upside multiple is just very, 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 very high, because we could be talking about the early stage of like a new run it hot regime with a new Fed pumping markets into elections, the whole 9 yards. And I would just be rather positioned early and incorrectly than like miss a bunch of that move. But that's just my own philosophy. Some people like to wait for more confirmation. They like to play it safer, and they take less downside, stop out risk in exchange for less upside potential. And that's fine. That's just who you are and how you want to trade. Nothing wrong with that. All right, let's move on to crypto because there's been a lot happening there. Last week was the official Stephen was right event. So if you've been following me in the Discord for forever, you know I started selling a bunch of Bitcoin and a bunch of crypto in general last spring, and then sold more around like the 1010 incident. And right around here, when we were rebounding from 1010, around like 110K or so, I told everybody in Magic Lines Premium, I was like, this looks so bad. And if it goes bad, it's going to go very bad, and we're going to take out 74K. And earlier this year, when we were pumping off the open up here around like 95K, I said, I might look fucking stupid, but like I think this is still going lower. And it went lower. It went lower in a big way, lower than I thought it would, honestly. So major capitulation move there for Bitcoin. Of course, everybody now wants to know, is it over? What's next? What do I buy? A lot of answers to that question. I have a lot of thoughts on crypto right now. I still am using like let me delete some of these alerts to declutter my screen. And let me get off the log chart so it's a little easier to see. Look, I am still looking at the yearly candles. We saw this sweep of the 2024 high with follow through to the downside. One of the reasons I was saying we were going to bounce hard from a little below 74K was because we had the prior all-time high here, along with the yearly mid-range, the mid-range from that candle at like 73K. So it made a lot of sense to me that we would bounce from this area. But is that the end of the move? I think probably not. And I think this yearly order block here that created this up move, and you can see this yearly fair value gap here, that's a very interesting area to me. Because if we go down on the lower time frame, you can see like all of this accumulation here, and you can see this liquidity chilling right above the green box that we never tapped back into, right? So this to me is just a giant magnet. And I would be kind of surprised if we don't bounce, but then come back down and take out 48K. So I have no desire to buy spot Bitcoin here for the long haul because I think we're going to bounce and then come back lower. It's too early in this process to tell where we're going to bounce to. We had a nasty move down, just one-way price action, kind of waiting for price to form some sort of range, right? And then see how price interacts with that range, and then use that range as a framework for getting long, for getting short. Price usually almost always comes back down to test either the low itself or some of the origin demand that formed the low. It's very rare to just get a V reversal and then straight up and then complete lockout price action, although that's the thing that everybody fears. The question you should be asking yourself, and the question that I have been debating for a long time, is should you even buy Bitcoin though, or should you buy something else? I've been pretty bearish on Bitcoin for a while for a lot of the reasons I've been sharing over the months, you know, the Bitcoin USD chart, but also the Bitcoin gold chart, the Bitcoin NASDAQ chart. None of it looks good. And all of it was saying to me that like we've just seen like the end of an era at a high time frame level in terms of the performance of Bitcoin versus the performance of other risk assets. And one of the interesting developments we've had lately that's kind of fed into this narrative, in addition to the quantum thing, which kind of made sense to me, but like was never like a really satisfying reason for like why Bitcoin is selling off. The release of the Epstein files has just really opened the can of worms on Bitcoin to an extent that I never imagined possible. And this has been one of the cool things people have been talking about in the Discord. Shout out to Marty, shout out to Ledger for bringing this stuff to my attention. You know, I've been kind of reactionary against a lot of the Epstein hype recently because people have been taking everything in the files and just running with it to some absurd extent. Like, I don't think George Bush was like molesting and beheading like 3-year-old girls and like eating their entrails and stuff like that. Just seems a little out there. And, you know, there's just stuff people are talking about with his bank name and all these things that they just ended up just being obvious, like just obviously not true, just obvious misinformation stuff. Um, but I got to tell you, some of the stuff that's come out with Bitcoin, as I've been reading more into it in recent days, and even just this morning, right? A lot of the stuff is stuff I just like was like, oh, so not fully formulated thoughts just yet, but the connection with Epstein and Bitcoin is very interesting. And one of the bearish things I've been saying about Bitcoin for a while is that Bitcoin is Orange Coin connected to Orange Man. And in like sort of like a mimetic and highly political world, that's just bearish. It's really bearish. Um, because the blue team is just going to win the next election, and then they're going to just hate all of the orange things, like blue hates orange and red, right? It's just kind of simple stuff. So that was bad enough, but you know who people hate more than Trump? They hate Epstein, right? Like everybody hates Epstein. Like only like 2/3 of people hate Trump, but like everybody hates Epstein. So Orange Coin being like pedo coin would be really bad, right? That's not something you want to see if you're a long-term Bitcoin holder. Um, this guy, what's his name? Aaron Day. Yeah, Aaron Day. I've been kind of digging into this podcast he did recently and some of the notes for it that Ledger was kind enough to compile in the Discord. If you guys want to check them out, the links between Epstein and Bitcoin are kind of crazy, right? Like the central claim revolves around funding and influence, right? So Epstein uh, basically made about $1 million in gifts to MIT, which was connected with some of the. You had this battle in 2017, for those of you guys who don't remember, between the big blockers and the small blockers. Bitcoin Cash versus Bitcoin, Roger Ver versus everybody else, right? And that was a very contentious battle back in the day, and it was a big propaganda campaign. And I originally, back in the day, was very much on the side of uh, the current trajectory of Bitcoin, the small block, right? The idea that what basically morphed into the digital gold narrative. But as recently as like the 2020 bull run, 2020, 2021 bull run, I started to like think that this narrative was like kind of BS, and I thought it hurt Bitcoin in a lot of objective ways. But also as like a trader, like I try not to care too much about what I think and what the world should be and where prices should go. I care about like what they are doing, what the market is doing, and it was objectively asinine to hold and own Bitcoin Cash instead of Bitcoin, right? Um, until maybe very recently. But I think with this Epstein stuff, right? You are seeing that there was a legitimate sort of conspiracy, especially involving Brock Pierce, who also has his fingers in like the tether pie, and honestly is like kind of a fucking weirdo. Like you just look at this guy, he looks like one of these fucking cabal weirdos, right? You just you're not surprised at all to find that like he was like really into Epstein and he was on the Epstein Island. He's involved with Tether, was involved with the Blockstream debacle back in 2017 that gave us the current state of Bitcoin. And it's kind of crazy to see that like Epstein had like a direct tie into that, right? The other level of corruption here too is that you've got Tether and you've got Cantor Fitzgerald, which is obviously a big, backer of Tether now, and who is like the guy behind Cantor Fitzgerald? Oh, it's Howard Lutnick, right? Big guy in the Trump admin. So this whole thing just like stinks to high heaven of corruption. And it was bad enough that Bitcoin basically just sold its soul to just number go up and get into the ETFs and be completely co-opted. And now there's paper Bitcoin everywhere, and you have this fucking Ponzi architect Saylor just buying all the Bitcoin. And he's literally like, it's like a fucking cult. He's literally a cult leader, and people are like deifying him like he's like a god. It's none of this like seems like it's going to end well. None of this seemed like it was going to end well to me for months. And you know, the main thing I was screaming to friends of mine, because I have a lot of friends who had like 80% of their net worth in Bitcoin. And I was just like, don't do that. That's fucking stupid. Like this thing, it can go down. You can be wrong. Everybody can be wrong. Take chips off the table. Go to like 30% or something. That's still ridiculous, I think. But like at least it's not like 80. And I even kept some of my Bitcoin, right? Because I don't want to be that guy that sold his Bitcoin and that goes to 10 million and I feel like a fucking moron. But like honestly, I think I'm gonna dump the rest of it right now. And I think I'm still working through what to buy. But the idea that we should actually be buying some Bitcoin Cash is kind of interesting to me. Not something that 2017, 2018, 2019 Steven ever thought that future Steven would say. But if this narrative takes hold, the very obvious reaction is to go to privacy coins, which we've seen pumping, right, in recent months, but also to Bitcoin Cash, because Bitcoin Cash was like the epitome of the big blocker narrative. And if this like the big blockers were right and they're not pedophiles and they're not connected to Trump in the same way meme starts taking foot, then like I don't know, I feel like from just like a narrative perspective you could see this thing kind of moon. And so it's interesting to me when I have an idea like this to go to look at the charts. Do the charts support the idea that Bitcoin Cash might start wildly outperforming Bitcoin? And you got to use the log chart on this thing because it's down bad, right? Like how down bad is Bitcoin Cash from the peak? It is down 98%. Even after this pump off the lows, which by the way, 150% pump off the low. I haven't heard a lot of people talking about this, honestly, but like this year, you had this nice little sweep of these range lows and 150% pump. And I think this started, when did this start? Yeah, the bottom was in February. Basically, max Trump Bitcoin euphoria was also the bottom of the Bitcoin Cash Bitcoin ratio. So if this thing starts reversing, like, oh my God. And what's interesting to me about this chart is it looks like so many other of those like banger charts that we've seen over the years, right? Like this is like basically the Coinbase chart. And it's like, what do you have? It's like this multiple head and shoulder triangle neckline breakout. Like this chart looks bullish as fuck. And the upside is like kind of insane. Like just some of these targets, like let's see what this target is, right? Like this target here is 270%. This high is 1100%. You know, just from like a relative performance perspective, it's kind of crazy. So I think Bitcoin Cash, Bitcoin looks really, really bullish. And I think if I recall correctly, the USD chart looked pretty good too. What do we have here on the USD chart? I mean, this chart looks better than the Bitcoin chart, right? It looks a lot better than the Bitcoin chart. You've got this clear uptrend we're pushing through. This major range that we formed here. And then you've got a deviation of the range lows. It's very easy for me to see why this would push up and break out on the USD chart. the USD chart doesn't look as good as the Bitcoin ratio chart, but like it looks better than the Bitcoin chart. Did Fuentes talk about Bitcoin? I didn't see that, Marty. I didn't see that. So yeah, I'm gonna buy some Bitcoin Cash. I'm turning at least some of my Bitcoin into Bitcoin Cash, and honestly, I think I'm probably gonna put a bunch of the. I'm probably just gonna buy more Hyperliquid. Gonna do the Bitcoin Cash Hyperliquid barbell at this point. Hype stalled out a little bit last week as everything else started turbo pumping. I am still not like convinced that price doesn't come back down here. I still think that sub $16 is a possibility. Would prefer not to see it, obviously, but there's no reason why that can't happen. So I don't have a strong conviction of whether the high time frame bottom is in here, but I do know that if we go back down here, I will just lever up and buy more. And so my current like mental framework is just to be, I think we mostly longed per, but bought some more hype around like $22 or so, $24. So happy to be long from there and happy to just add and wait this out. I'm still pretty bullish this. The hype Bitcoin chart, I think, also looks incredibly bullish. Let me see. Yeah, so no breakout just yet on the hype Bitcoin chart. We did swing fail the range highs. So wouldn't say it's the most turbo bullish thing at the moment, but certainly looks like it's going to break out and outperform. So yeah, not much to do for me from these current levels on these things. But it's like if I'm going to be exposed to crypto and I'm going to be exposed to Bitcoin anyway, it's like, well, do I want to be exposed to Bitcoin or do I want to be exposed to these other things? If this money was in cash, might be a different question. Do I want to be in cash versus Hyperliquid here? A little more interesting question, depending on what your exposure is. But for me, like all this stuff looks a lot better than Bitcoin. Per Hyperliquid Strategies had a nice close last week. Closed the weekly very solidly above this range. So that's looking good. We do still have an imbalance down here. So not ruling out another move below 430. Probably would view that as a really good buying opportunity. This chart is just like a freaking mess to do TA on. Honestly, it's like a very thinly traded shitcoin stock. So, you know, don't put too much stock into the lines. I'm mostly kind of concerned with what hype spot is doing. But like, even so, it looks interesting here. I mean, there's the breakout, there's the retest, and you can see all of the wicks respecting the breakout level. Looks like we had a nice move this morning. Yeah. Cool. Love to see that. Yeah, still very, very bullish these things. I know one of you guys asked me about ETH BTC. I'll tell you one thing. If I was going to own crypto, I'd feel a lot better owning about Ethereum. I think Ethereum at least has long-term outs or better long-term outs to still do great things at this point. My thoughts on Ethereum USD haven't changed. I do still think that we're going to go bare minimum sub 1300, but like likely eventually take out those yearly lows we've been talking about around like $800 or so, if not lower. So there's that. The ETH BTC chart, when you zoom way out, I'm trying to see like where you can paint a clear picture on this thing. Yeah, I mean, the most bullish thing about the ETH BTC chart is that you did put in a very nice yearly sweep last year. So that's great. It's normally just like a first step kind of thing, though. It's not impossible that we could come back down, take out that low. And on the monthly, yeah, that's kind of interesting, actually. Because on the monthly, you do have a bullish change in the state of delivery after the yearly sweep. So I would actually expect this to bottom somewhere in here and then make a run up. And I think when it makes a run up, like it's going to run out so much low resistance liquidity here. So it looks really good for upside at some point, I think. I actually think the long-term chart here is quite bullish, but we're talking monthly and yearly candles here, so could take a while to play out. I would say I'm like way more bullish Ethereum than I am on Bitcoin at this point. Like if I had to go into a coma and hold something for a decade, I would literally rather own ETH. In the short term, I don't think ETH USD is done dumping. This chart, you know, we had that nice move last week, but this is just the O-face meme right here. It's like where even is that pump on this chart? So I think price is going to bounce somewhere and then probably come and take out 1375. The exact path that this takes is kind of unknown to me at this point. Like if we have a shallow pullback here and then come down and take this level out, I think we could actually get like a pretty enormous pump back to range highs. But I would actually expect it to then go back down, right? Which would just be so much mental illness. I think if you really like ETH, like I guess you could buy some spot like 1300. I guess that's not the worst thing in the world. I still just think like all of these levels are going to get run out here down sub 800. I do. Oh, he was talking about Fuentes was talking about the George Bush entrails being ridiculous. Yeah, I did hear him say that actually. And that is just, it's fucking stupid. I mean, come on. We gotta have some standards in our conspiracy theories, right, Marty? But yeah, ETH bounce looks good. I don't like the long-term setup. I do like ETH BTC long-term, but I don't know. I think better opportunities elsewhere in crypto. I think the Bitcoin Cash opportunity like legitimately looks interesting. And I think Hype obviously looks very interesting. I saw that Kyle Salami left Multicoin Capital this week. Pour one out for Kyle Salami. Ugh. Solana took out that level I've been watching for a very, very long time. I think the way I drew this is actually probably a good bet on how this plays out. I really, I don't know. I just really think Solana's going sub 50 and probably sub 30 again. I think if you want to own this chart, you should seek therapy and Jesus. And that's my general thought on this. Damn, we've been going for an hour already? Wild. All right, let me see what else I got on the agenda here. Looks like we covered most stuff. I'm gonna get to a couple of these questions here that I haven't gotten to. If you guys get any requests, questions, drop them in the chat. Be happy to talk about that. I know I got a request for AREC, American Resources Corporation, so we can pull that up. Generally like these plays. I like buying the real things in the stock account. This one, it's a freaking mess on the yearly. The quarterly chart gives me some pause because of this major rejection candle here. So I would prefer to look for a sweep around like $2, somewhere below $2 to get involved with this. Yeah, monthly still looks kind of bearish to me. Weekly, it's just pretty strong rejection. So I would set an alert sub $2. I think the odds you can buy at sub $2 are pretty high. That's still a decent pullback from here, right? It's like 30% to go back below $2. But yeah, when I see the high time frame candles like this is just such a severe rejection, and then you have like the imbalance below. I don't like being long above levels like that. If it pumps without me, I mean, so be it, I guess. But probabilistically speaking, I like to see these high time frame levels get traded to, and then I like to see things develop on the lower time frame. Ideally, a nice monthly sweep with some bullish daily order flow changes, a change in the state of delivery, some quality market structure breaks, something like that down here. And I think that probably looks good. On a related note, COPX, which is it COPX? COPX? Yeah, COPX. Copper ETF. Still something I want to own. Kind of got shaken out of my position during that dump. I don't know. The chart is still a bit of a freaking mess to me. I'm kind of waiting on this a little bit more, although it's probably worth just owning some with the stuff we talked about with Warsh. But yeah, I don't know. Whenever I get these like massive volatility shakeups in the chart, I like to let the range form a little more. In a perfect world, see something coming back down here and sweeping out 81 and back inside and something like that at a minimum. Because otherwise I just worry that this does some sort of deeper retrace towards prior demand, and that would be a pretty nasty sell-off, 30%. So if you don't mind eating 30%, that's cool. Who else asked something here? Somebody asked something about my bot. Oh, the Buida. What are you doing with your bot? I got big plans for my Claude bot. I am currently building out my own hedge fund. I've got like a multi-layer org structure going. I've got some low-level intern agents running on really, really cheap models. I'm going to start running them locally when I get my my new computers in. So they're just going to be running like 24/7, scouring the internet for trade ideas and parsing them. They're going to kick up to like kind of like a mid-level sort of like PM agent that's running on stronger models. I'm going to have like a council of agents with like kind of different perspectives on the world, like assessing all of the ideas and kicking them around. And then they're going to kick stuff up to me eventually. And then eventually I'm going to have a trader agent who is able to actually like analyze the charts of those as well, and like only give me the ideas that have like really, really good charts in addition to that. And obviously the end state is that these things actually just full on just trade for me. It's going to be a cool year. I'm hoping at some point that we can just have like a full AI agent kind of hedge fund running out of the Discord, and then we just completely change and reimagine how we do like financial communities. My head is like exploding with ideas right now. I think it's going to be super, super sick. So, stay tuned for more developments on that. But like, I'm liking what I'm seeing so far. It's awesome. Like I can honestly barely even focus on trading, because trading to me now seems so small-minded, like taking these little positional trades, when I zoom out and think about the larger context of what is possible to do with the AI stuff now. I mean, like it's mind-blowing. Saw Bernie asked in the Discord what models I'm running on OpenClaw. I'm running a bunch of different models. There's this tension when you run these open AI agent infrastructure stuff between the fact that these things are self-directed and can run 24/7 without your input, just doing things that you sort of give them a high level directive to do. So that's the good thing. The downside is that if you have an army of agents autonomously running 24/7 on Claude Opus 4.6, like you're going to spend like $15,000 a month on tokens and probably bankrupt yourself pretty quickly. So what I've done is to try to create some sort of like multi-level infrastructure that is going to basically use cheaper models to do more rote basic tasks, hopefully the bulk of tasks, and to selectively use the high-level models whenever possible, only when necessary. One of the nice things you can do running stuff locally is like you can use something like an OLlama to basically do like your model routing for you, and you can run an open source model like a DeepSeek, and do it entirely on your machine. And so if you do that, then your only cost is basically like electricity at that point, and then these things can kind of grind away. And then the happy medium between like the kind of entry level models and the Opus 4.6, which is basically like the granddaddy model right now, is this Kimi 2.5 model, which was clearly, I think, ripped off by the Chinese from Opus, which is great because like I like Opus. Kimi is like just barely able to be run on like 2 Max Studios that you daisy chain together. Those are like 10K a pop, so $20,000 to get that setup running. The downside of that is that it's still kind of slow, right? So your tokens per second you can process is going to be a little weak versus using like Kimi in the cloud or Kimi on like a custom like NVIDIA setup. If you're running 24/7 work though, what's more important is the uptime of having all these things just doing work, as opposed to like how the throughput, the throughput of that work, right? Like you're willing to sacrifice some throughput in exchange for being able to run this stuff 24/7, and to not like murder yourself with token costs. So I use like a lot of other models in between as well. Like the Claude agent has this thing called like a heartbeat, where it's sort of like self-directed, like kind of checks the status of a bunch of things like every 10 minutes by default. Like I move that over to something like Haiku because that's a lot cheaper. Like that's like $100 a month savings basically for me doing that. I'm still not sure whether I like developing with Codex versus Opus 4.6 yet. 4.6 is definitely better. It's more expensive. I don't know how much better it is. And then you have that mini Mac. I forgot the name of the mini model. That's like a really cheap kind of development alternative if you're doing stuff that doesn't need like kind of big brain things like that. I use DeepSeek, I think, for a lot of like web scraping because it does pretty okay doing that, and you don't need Opus. If I want help like writing like a YouTube script or something like that, or some other deep analysis, like I use Opus because it's just so much better at processing stuff, and it's worth it for the cost. So a lot of stuff going on, Bernie. We've got the ClaudeBot Vibe Coders thread in the Discord. If anybody's interested and they want to hop in there, there's a bunch of us kind of working through this stuff together. And everything I'm telling you right now, for all I know, like 3 days from now, I'll completely change the infrastructure because everything is just moving so fast. But it's really cool. It's the most excited I've ever been about anything ever. And definitely the most excited I've been since like I was kind of living through the internet computer revolution as a kid, where like every month some new cool thing happened and everything was moving so fast. So pretty cool time to be alive. See, a couple more questions came in here. in the chat. What do you think about VVV, Venice token on base? Yeah, that's probably an interesting thesis, right? So Venice is basically kind of like I don't have like a full deep understanding of what Venice does. It seems like it's some sort of like privacy enhanced AI router kind of thing. I saw people were using it with OpenClaw, which is interesting. I'm sure VVV is going through the absolute moon. That's the token name, right? VVV. No, not as crazy as I thought it would be. The lower time frame looks terrible. Like, I never like longing into these like one-way sell-offs. Is this the token VVV? I think it's VVV. Let me double check this. Yeah, Venice AI VVV. It's an interesting level here at 187. You know, this is prior range low, and you could, I guess, say this is a deviation and then a strong push up, and then maybe this is the range retest. I guess I don't hate longing it here because I don't know, you could do a little tight stop if you wanted to. And the upside is quite large. You don't even need a stop if you're doing spot, you know. So yeah, that's an interesting play. It's an interesting play. I'm actually surprised it's I don't know, is maybe this was the run up. Maybe there was just maybe the market was already ahead of this way before I found OpenClaw, and now this is the retrace. So yeah, I mean, the only thing besides Hyperliquid and possibly the reshifting of like capital to like a different Bitcoin narrative, besides those two things, the only thing in crypto that's interesting to me is this like kind of agent thing. And you know, I've talked about virtuals a bunch. It's like one of the only spot coins that I own just because I think the upside potential of it is quite high, and it fits nicely into this bucket. But I think Venice would have to be another entry into that bucket. I just don't know anything about the tokenomics, the value capture, the release schedule, you know, stuff like that. That is something I have no idea about. Whereas with virtuals, I have a pretty good idea about virtuals tokenomics, and I actually think they're pretty good. So I feel a little more cozy in that. But yeah, thanks for the heads up. This is an interesting thing to keep an eye on. Looks like I got one more question in here. Gary Moyle asks, what do you make of tin as a commodity, and specifically miners like Cornish Metals? I have never in my life thought about investing in tin. What are the industrial applications of tin? I mean, that's a hell of a chart. It's a bullish chart. This is just like so much other stuff in the metals arena where you have these charts that are just, they're just like blue sky breakouts, right? It's just like trading like a whole new like altcoin frenzy, buying this stuff. Yeah, I mean, key levels on this chart, your prior range high, the zone that you just broke out of. Like if the monthly closes here, which is still 17 days away, you generally expect this area to be like a breakaway gap unless you see a sweep of the monthly high. And because you expect this to be a breakaway gap, you're not expecting price to go below 117 or so. It's an interesting area on the weekly as well, because there's your weekly order block. So yeah, I mean, like any retrace into this general area is got to be like a good spot to be looking for buys. The way I trade, right? Like these are areas of interest to me. So I wait to see price go back into them and then what they do. So in like a weekly area of interest, I'd probably be looking for, some market structure shifts on the 4-hour chart, or maybe like a daily sweep with like a corresponding 1 hour, changing the state of delivery, something like that. And then I look to get long. It's definitely a little awkward to buy here. But yeah, I mean, if you don't care about like a drawdown, it looks bullish. And if you get a pullback, and the perfect, the perfect scenario with stuff like this is you get this kind of strong one-way move up, and then it like chops a little bit and like leaves a bunch of liquidity behind, and then you get like kind of some sharp move like that. Like these are the most like ideal setups. You've got like a zone, expansion from the zone, acceptance outside of the zone, and then you have like a fake out move from the consolidation to run some liquidity. That's kind of like, it's kind of like my main bread and butter setup at like a very high level. So that's what I look for. But you could like bid some of the liquidity in anticipation. Like if you're kind of like a guy who's not sitting in front of charts, right? Like you could bid 130, and you could bid these lows here at 118. I don't know if we get to those, but it's always possible. But I would think that 130 might be like the first level that I would blindly bid. Although whenever you really like a stock or something and you just really want to own it, I'm always like a big advocate for just market buying a position no matter where it is, and just doing it in small size so that you have exposure, you don't feel FOMO and make bad buys if it goes up, and then you give yourself the flexibility to add to the position on a retrace. It's there on your watch list because you own it. It's at the top of your mind. So yeah, I would just buy some right now. It looks good, and I would be watching the chart for some sort of setup on a pullback and looking to add, but probably wouldn't like market buy 100% of your position here. Probably not smart. I think that's everything. Marty, believe Proc Pierce is a mighty duck. Yeah. Who knew that little guy in the Mighty Ducks was going to bring about the downfall of Bitcoin? Life comes at you fast. He was in a Gushers commercial too, right? So funny. Anyway, thanks guys for joining the stream. That was a fun episode. One more shout out to the free Magic Lines Discord at the description below. Check that out. Check out my Substack. Check out my X. Like, subscribe, do all the things. Thanks for joining, guys. It's going to be another big week, another big year, I think. Never a dull moment in the Orange Man administration. May the lines be with you all. Goodbye.